Hey everybody, we are going to talk about Upstart. UPST is the ticker symbol. They're one of my favorite fintech companies to talk about. The stock is, almost quadrupled in the past year, and I think it can keep climbing. Before we dive into why and how it's doing lately, please take a minute and check out the link you see on your screen, fool.com/Frankel. It is the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool, and stay tuned after this video for a special message. So let me go ahead and share my screen. I want to talk about how Upstart's doing. The short version is that Upstart's up so much because it has kind of produced 3 consecutive really strong earnings reports. So this is from the fourth quarter, all the stuff that I'm about to share right here. You can just see some of these numbers. Revenue was up 56% year over year. Operating income, it's still at an operating loss, but about 1/10 of what it was a year ago. Really impressive numbers here. Net income, it's losing a little bit of money, but not terribly at all. On an adjusted EBITDA basis, it's highly profitable compared to roughly break even a year ago. And there's a lot to like about this business. I'm going to circle back to this in a little bit, but there are 2 new types of loans that are rolling out that are really impressive right now. Upstart's been trying to break into auto lending for a few years now, and it seems to be doing that now. This is 61% sequential growth, meaning just quarter over quarter in auto loan originations to $43 million. Also, home equity lines of credit. This is a pretty new form of lending for Upstart. They just rolled this out a couple of quarters ago. $27 million in home equity line of credit or HELOC volume. That's 59% more than the quarter before. And really big headline is just the market, the investor interest in personal loans has just rebounded significantly from the 2022-2023 bear market period. You can see right there, $1.3 billion of new commitments from existing capital partners to purchase loans. Short answer is, when Upstart makes loans, there will be investors to purchase them. One of the big reasons the stock got clobbered a while ago is because the company ended up having to keep a lot more loans on its balance sheet than it wanted. So one big thing about Upstart is its model works. The company aims to do a better job of underwriting loans than the traditional model, which is the FICO model. And I don't want to really go into the mathematical details of this. This is Upstart's risk grades, FICO score tiers, and generally speaking, Upstart risk grades do a much better job of predicting defaults than the FICO score. So this is saying, even if FICO gives a customer a terrible credit score, say 639 or below, Upstart's risk grades can predict which in that group are going to have low default rates and which ones are going to have high default rates. So the model works. There's clear evidence that the model works. Looking forward, 2025 could be a pivotal year for this company, for lack of a better term. It's expecting about $1 billion in revenue, which even in the high-flying pandemic era years when the stock hit $400 a share, it was highly profitable. Upstart never did $1 billion of revenue in a single calendar year, so that would be a first for the company. Most of it fee income, some interest income. It's expecting to be at least break even on a GAAP basis, so that's positive net income, which would be the first year since 2021 where that's happened. Positive margins, just really strong guidance throughout. So one of the biggest reasons that I think this could go a lot higher potentially is because of the market opportunity. So this is the personal loan market right here. Upstart's the vast majority right now of Upstart's loan originations are personal loans, like 99%. It's a $155 billion market. Upstart's annualized personal loan volume based on the fourth quarter numbers is about $8 billion. So it has a little over 5% of the personal loan market. That's a pretty good share. With auto loans, I mentioned that they did about $43 million of auto loan originations in the fourth quarter. That's almost a $700 billion market opportunity in the U.S. each year. It has way under 1%, like 0.1% of that. So really, really small portion of that market, but it's growing really, really fast. It's finally starting to gain some traction, and I think that could be a big growth market. The home loans are the real kind of X factor here. I mentioned they recently branched out to home equity lines of credit, or HELOCs. They did a little over $20 million of volume, not a ton, um, but home lending. It says right here it's a $1.4 trillion market. That's based on the past year when the real estate market has been terrible. Um, in a typical year in the U.S., mortgage volume is closer to $2 trillion, and the real kind of hidden opportunity here. I mentioned they're focusing on home equity lines of credit for right now. U.S. homeowners are sitting on about $35 trillion of home equity. That's more than at any other point in history. Right now, a lot of people aren't tapping that. I have a lot of equity in the house I'm sitting in right now. I'm not taking out a home equity loan because interest rates are terrible right now. But as interest rates slowly start to normalize, more people will tap into that home equity, and that could create a big opportunity for companies like Upstart. There's also small business lending, which is almost a $900 billion market that Upstart really hasn't even tried to tap into yet, but plans to. So there's a lot to like going forward. Um, so you can see right here just how small the other two opportunities are. Personal loans in the fourth quarter, a little over 243,000. Meanwhile, they made about 1,700 auto loans and about 450 home equity lines of credit. So those are two very, very small parts of the business so far that I think could get a whole lot bigger in the future. I am very, very bullish on this company long term. It's not likely to be a low volatility stock by any means. Even if things go well, this is going to have a lot of ups and downs along the way. It's a lot of growing pains. But key point is that this is not 2021 all over again. This time, Upstart is a stronger business. First of all, I mentioned they're forecast to hit $1 billion of revenue for the first time ever. They've kind of de-risked the business model a little bit from where it was. The balance sheet's very strong, and this is not like the spike we saw in 2021. This is a more justified move in the stock. They're doing a great job of executing on their opportunities. Back then in 2021, things like auto lending were just kind of an idea they were kicking around. Now they're actually doing a good job of executing on some new loan types. I'd love to know what you think about Upstart. Is it a stock that you would invest in? Do you think it is still kind of a flawed model? I'd love to know your thoughts. I'll do my best to answer any questions you have individually. Please take a minute and click subscribe to my channel if you don't already. I cover Upstart and a lot of companies like it very often. And thanks for watching. I'll see you next time. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investments. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market more than 5 times. Go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 914% as of January 7th, 2025, and are measured against the S&P 500 returns of 174% as of January 7th, 2025.